Okay, um, it's the 18th of September 2024, and we are about 15 plus minutes to New York Open. So let's start an analysis. Let's go straight to the charts. Okay, so let's go to the daily time frame as we usually do. Um, so price has made some sort of structure, as we can see on the daily time frame. We created some sort of resistance on the daily. We still don't have weekly resistance. We do have weekly support down here at 2530 from last week, but we don't have weekly resistance yet because the weekly candle, this week's candle has still not closed, and we don't know whether that's going to close a bearish candle or a bullish weekly candle. But we do have some sort of daily resistance that we can see right here. So let's go to our trading chart. On the daily, we have 2582 as daily resistance. 04, I think. Sorry, 09. Yeah, roughly 2582. Let's go to the H4 time frame. H4 is the time frame that I look to trade from, to take trades from. Okay, it's not the H4 time frame that I trade from. I trade from the M15 time frame, but H4 zones, H4 supply demand zones is where I look to take trades from. Okay, so let's quickly start drawing the H4 demand zones. There is a zone there. That's a zone there. It has been tapped. We do have a zone further down here as well that has been tapped into. So we don't need this one because price has broken through it. This is the zone that we've tapped into here. This rally, this base-in candle, and this exit out of that base-in candle, and that's exactly where price has come to. I think we had drawn that same zone on Friday as well. That's exactly where price came to when it created the daily resistance. It came down to that H4 demand zone, and now price has been pushing. It came to it yesterday, and since yesterday, price has been pushing up again. We don't have a demand zone above that, or we have sort of H4 support here. We'll keep an eye on that. Let's look at anything further down. Further down, we have that there. And the reason we are drawing, the reason I'm drawing zones this much further away from price, it's about 500, 600 pips away from price, is because today, about, I think about 5 or 6 hours from now, about 6 hours from now, is the interest rate decision, the FOMC interest rate decision, and that's going to drive price up or down, depending on what the decision is, right? So we will mark those zones. Obviously, we're not going to be I won't be trading that late into the day. I'm not going to be trading 6 hours from now. I might not even be looking to take a trade during the first 2-3 hours of New York session because volume's going to come in much later. We can anticipate that volume will come in much later today. So hopefully Thursday, Friday will be better trading days. Okay, so we've got that. Now let's look at supply. Here there is a supply zone. That's a base-in candle, and you see a drop there, and price is exactly in that area right now. There is one above here as well, right when that daily resistance was created. There's one there as well. Price has tapped into that, so there is a little bit of that supply left because price didn't break through it yet. We're going to mark that, and yeah, roughly those are the zones. Let's just look here. Let's just go to the H1 and see if we have a zone there, because we do have this here, which price has tapped into, and we do have another one there. So hmm. we do have that H4 support there, right? H4 support, and if you go into there is a zone there, right? There is a zone there. If you clean it up on the H1, it's clear. You have a drop, you have two base-in candles, and you have a rally. So leg in, base, leg out, and price did tap into it and is pushing up, and it's taking out this supply. And if it goes above this, then it'll take out that H1 supply as well. So it's already taken out this H1 supply. If it goes above this point here, then it'll take out this H1 supply as well. Okay, so roughly that's how it is. Let's just put these digits now. So that's the open is 949, and the low is 304, 949, 3.04. Okay, and here we have a close at 331 and 681. 681, 331. All good there. And here, let's go down to the H1 to get it right. Close 918, and the low is 578. 918, 578. Okay, so that's the demand zones for now. I'll be coming back to these to see which are high liquidity zones and which are not. Here we have the close 940 and the high 695, 6.95, 9.4, close 940, high 695, yeah. So to 940, yeah, okay. And then here we have a high at 89.68, 89.68. We have 6.95. So we just got to go a little bit higher. 7.5. Okay. Right. So we got H4 supply there. We got H4 demand there. Those are the closest two. It really doesn't take that long if you do practice drawing H4 supply demand zones. Really, it doesn't take that much time to draw them correctly. Right. So these are zones that we have. These are the closest two zones that we have. We have H4 demand here, and we have H4 supply here. They are not neat zones. They're quite ugly. Ugly as in price has this zone right here. Price has already tapped it. Right. We've already tested it once on the way down. So we've tested it here, came down, we went up, tested it again, and we've come down. And now we're going to test it for the third time, right? So this zone here, this H4 supply zone, did not take anything out to the left, right? Maybe that one there, but that's all a part of this. So it didn't take out anything. So I'm not going to mark it as a high liquidity zone yet. Okay, let's just park that for now and look at the demand. This one here took out the H4 resistance there, right there. And this support took out that resistance right there. So that is a high liquidity zone, right? That becomes a high liquidity zone. If it takes out this high, then that becomes even a better high liquidity zone because it's taken out two zones. So I'm going to keep that there. This one, we didn't take out anything to the left because there is absolutely nothing to the left here. The chart is clean. You know, it is all-time high. So there's nothing to the left here for price to take out. So this zone has not taken out anything yet. If this candle breaks up here, then I will consider this entire thing a high liquidity zone. All of that basin candle, all the way up to that, all of this 130 or 30 pip, this area, entire area becomes a high liquidity zone. If this candle or the next H4 candle breaks these two supply zones, if it breaks above it, if price starts to close above it or breaks through, goes through them or breaks above them, then all of that becomes a high liquidity zone. Right now we got a high liquidity zone right here. We've refined it on the H1 time frame. Here we got a drop, got two basin candles, and then we have a rally, right? So that's taken out this. So we are going to consider this as a high liquidity zone. Okay. Now this zone did take out these. It did take it out, but it did test it. So if you go down to the H1, it should be clearer. Okay. So that's the opening. It's the 9 a.m. candle, silver candle yesterday, and yeah, that's the drop. That's the start of the drop, right? Let's just look at this again. Okay. We had demand here. We had demand here. We had demand here. If you go back to the H4, you'll see that same demand here. We had a rally. We had some base in candles and a leg out, a leg in, base, three candles basing and a leg out. If you go down to the H1, you can refine that a little bit. And you can see how price held there, went up, came, tested, went up again, came, tested, went up again, then broke. So this is a high liquidity zone because it did break this zone here. All right, it's a little cleaner on the H1, but you can see it on the H4. Right, on the H4, you draw it like that. That's how you draw it on the H4. So, okay, that'll be the smallest basin candle the price has come into. So it came there, then it broke. So this is the zone that broke it. This was the break. Price has tested it once. So I would mark that as a high liquidity zone because it's broken it once. The only issue is it's already been tested a couple of times. So I'll be very careful trying to take full risk on any sells in that area. Um, I would prefer the buys. I would prefer buys. From here, I would prefer buys. Yeah, that's about it. That's what we have for now. This is all that we have for now. This is all what we have for now. So we have H4 demand here. This is the H1 time frame, but we marked H4 demand here. We have H4 supply here. There's a high liquidity zone here that has already been tested once or twice, and we have a high liquidity zone here that has taken out this zone above. So we're gonna leave that there and see what happens there. And then here, further down here, on H4, we have a demand zone that was tested, but this demand zone hasn't taken out anything to the left because we are at all-time highs. So this demand zone should have taken out something here if price was there, and then it would have been high liquidity zone, but it isn't, right? It isn't a high liquidity zone. So I'm not looking to take a trade from that area. But these two zones near current price, maybe I'll look to possibly, if you do get an opportunity in New York session, in the first 2 hours of New York session, First 2 hours, first 2.5 hours of New York session, I'll look to take a trade, a sell from there, or a buy from here. Um, yeah, okay. Post these zones on the group. Okay, so this is what we discussed. Previous daily has created daily resistance around 2528. Okay, sorry, 2582. 2582. Price is currently testing previous tested H4 supply. Okay, that's exactly what we're doing right now. There's H4 supply and price is currently testing it again. There is daily SR above current price 2582, but there is nothing below because we are at all-time highs. So price can pull back to bounce off or reverse at this level around that area. For buys, I'll either wait for us. If you are trading, as I said, if you're trading the indicator of the, if you're taking the signals of the indicator, this is the kind of execution you should be waiting for, right? You should be waiting for a buy signal at one of these levels here or here, or for a sell signal at one of those red boxes right there, right? That's what you should be doing if you are trading the buy or sell signals of the indicator, which is the indicator that is right here. But I'm not using these signals because I'm trying to show you guys without an indicator on a naked chart how you can trade without, you know, without purchasing any tools or renting out any tools, how you can trade, how you can do analysis and potentially take a trade, you know, potential um, uh, a low risk, high probability, high RR trade on a naked chart without having to purchase or rent any indicators or trade managers. So this is what I'm trying to do with these live sessions. Okay, but you can also trade if you do have the indicator, if you do have this price action entry alert indicator, then you, which is this one here, if you do have this indicator right here, this price action entry alerts indicator, then um, you can take the signals. So sell signals from this area and then buy signals from these green boxes here, right? So for buy, I'll wait for a buy signal from a demand zone, which is either of these two are okay for demand zones. Wait for price to pull back, right? Create support. So when I say create support, it's always on the M30 time frame. Wait for support to be created because M30 is a better M30 is a better confirmation time frame, right? So wait for M30 support to be created. Then as that M30 support is being created, you might get a M30 buy signal or a M15 buy signal while that M30 support is being created or soon after it's created, right? To retest the current high, to come back and retest this high basically. For sells, I'll either wait for a sell signal from supply, either one of these two boxes, or wait for price to create a new low, come down, create a new low in the New York session, pull back, create resistance on the M30 time frame, and then again, while that M30 resistance is being created, take a sell signal at that M30 resistance, either M15 or M30, to come down and retest the new low that it has created, right? Now, volume might be low during NY session, as I said, because we have the interest rate decision later today. Okay, so do not take buy trades inside or near a red rectangle. So unless if price moves up, breaks this, then pulls down and gives you a buy signal, then it's okay to take one because price has broken this. But right now, as you can see, price, this zone is still holding, the supply zone is still holding, price hasn't broken it. If it breaks, then yes, you can delete that, it comes down, gives you, creates support, and then a buy signal, that's absolutely fine to take it here, right? But right now you don't take that, you don't do that because we have no idea, we can't anticipate a break before break happening, we don't know, right? We can't just blindly take trades up here because we don't know if the zone is going to hold, we don't know that. Okay, I hope that was clear. Okay, yeah. Okay, so now we wait, we've got another 6.5, but almost 7 minutes until this 15-minute candle closes. We have a high liquidity zone area here, but as I said, price has tested it once, twice. So this was the move down. Price came back and tested it, went down, came back, tested it, went down again. So you just got to be careful, right? You just got to be careful. This was the big move down, this 15-minute candle here. So yeah, this candle right here. I want to see how far did price come up to it. Yeah. Hmm. Let's wait for this M15 candle to close. I want to see where it's going to close. If it's going to close down here, we're going to come, if it does. So the reason I drew the fib here, the way I did it, is because this M15 candle that came into this supply zone, right? Now this was a high liquidity zone. Was it a high liquidity zone even yesterday? Yeah, it was. Okay. So this move did break this H4 demand zone or this H4 support. There's H4 support here that's created, and also there's an H4 demand zone that was created here, right? So price wicked it here. So this did break all of those lows. This moved down, this candle broke this low, and this low. It did break all of that. So this was a high liquidity zone even yesterday, right? I wasn't at the charts yesterday, but this was a high liquidity zone even yesterday. And what price did was, in the New York session, it came up there, right? So it came up here first. It did it first. It came up here, and then it came up. It came up to this high liquidity zone after he broke all of those. So let's just put a. I want to put a mark. I want to put a line where it broke, right? Well, okay, so roughly, um, let's put it right there. That low, 529, 529. Let's just change the color for that for a second. Yeah, that low there, 315. Okay, okay. Now, price broke the first low, the first one that we had marked. As you can see here, I'd marked this low here. It broke that. So that low is 75.29 and the next low is 73.15. Pay attention to those two values, okay? We go to the 15-minute now. Yesterday, what happened in New York session is price broke the first one, broke the second one, came back and tested the H4 supply zone for the first time. So once it broke it, this red box became a high liquidity zone yesterday. Then it came and tested it. Then it went further down and broke it again, right? And when price came back up, it broke these highs. Okay, so there was there a way to enter on that trade? No, there was no way to enter on that trade. It did not enter. So it was this candle that went up and came all the way down. Okay. So now, since this candle is the one that made the move down in the high liquidity zone, I'm going to pay a little extra attention to that candle. Okay. 226 and 814. 226. I'm going to pay a little extra attention to that. Okay. 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 I'm going to pay a little extra attention to this candle if we will come up here to this sniper entry or not, right? Um, I don't know. Now, you got to keep in mind price has tested this zone a couple of times. So you got to be careful. We've broken these highs now, broken that high. Let this candle close. I want to see if the next M15 candle is going to break this high and come further up and then reverse. I will be willing to take a trade here. That stop loss is about 10 pips. It's a 10 pip stop loss. If you do come here, that'll be 10 pips. But I want to see what the next M15 candle is going to do, because this candle has broken this high. If the next candle breaks this high, then I want to see what's possibly going to happen after it breaks the high. If it's going to continue up, or we're going to get a rejection down. Okay, that's very important. So let's just wait for this candle to close. Let's just roughly calculate our lot size for this. So I've shown you guys how I do this. So the count is at around, what is the count now? We started with 2K. We're at 2126, right? 2126 now. So let's just put it at 2100. And I'm willing to lose, let's say, $15 on this trade, because I'm not willing to take my full risk, because price has kind of tested this zone already, right? 15, so we have a 10 pip stop loss, so add another 4 to that for spread. That's 14 pips. Okay. Sorry, risk ratio. Okay, 0.01. So basically 1 mini lot is what I'm willing to risk on this trade. 1 mini lot to see if I'm right or wrong. Okay, $15. That's all I'm willing to risk on this trade. I'm not willing to risk any more than that. And then that $15, we will manage risk. We'll try not to lose that entire $15 if we do come up here. Now, having said that, price has already moved down from here. Okay, so price did come to this this area of the fib, the midpoint of the fib, and rejected it. Okay, so let's just go on to the M1 and see what that looks like. Yeah, price did reject that area. We have, if you look at the M5, yeah, we have a strong rejection there. We have a strong rejection here, right at the mid of the fib. So I don't know if price is going to come deeper inside now. I don't know, but if it doesn't, then I don't have a trade. If it does, great. If it doesn't, then I don't have a trade. Okay, that's how I trade. Now, I don't chase price just because I have a reaction here. I don't chase price. I'm not going to put my stop loss above here and take a trade here, even though it might drop down all the way here. I'm not going to do that, because then I would have a huge stop loss. I'd have a 60 odd pip stop loss, and which I don't do. My stop loss on gold is about between 15 to 25 pips, sometimes 30 pips at most, right? Sometimes, very rarely, if the candles are very big, then I'll probably have a 30 plus, a plus 30 pip stop loss, but never goes above 35 pips. Okay, so that is the maximum stop loss I'm willing to take, is around 35 pips. So taking a trade here, trying to chase price here, makes no sense, because the stop loss is way too big. 60 pips, no way am I taking that trade. Now, because I hate being in drawdown. If I do take a trade here, price can easily start to reverse, and I'm going to be holding drawdown, and there are so many M15 highs. There's an M15 high here. Sorry, there's an M15 high here that I would have to manage risk. So I would unnecessarily, if I take a sell order here, unnecessarily have to close part of my position here, because I have to manage risk on this candle. And then if it breaks here, I have to manage risk again here, right? So there are two places that I have to manage risks. I would not have anything of my position left if I took a position here. So we're going to wait. We're going to wait to see if price pulls back. Now, while we wait, there is a demand zone here. So if you go to the M5, it's very clear there is demand zone, which is what price is reacting to right now. It's reacting exactly to that demand. Yeah, right there. Rally and a base and then the rally. Okay, on the M1 it's very clear. Prices, we have a rally, we have we have some basing candles there and then the push up, and price is right there. Now price might break through and come straight down, and we may not get entry, and that's absolutely fine. I just want to see now what the yesterday's push down looked like on the M5. So that was a very nice rejection on the M5. Very clean, very clean, right? So the daily, yeah, okay. That's a very clean. That was the high of the day, I think, right? Was it 82.20 high? No, no, no. That wasn't the high of the high was created in the Asian session. Yeah, the high was created in the Asian session, London session. Sorry, London session. High 86.95. Yeah, that was created in London session. But this was a very nice rejection on the M5 to push down. If you go down to the M1 and yeah, not too good on the M1. But on M5, very clean, very clear. M5 push down. The next candle dropped. It didn't even have. It didn't have. It didn't need to come up. It had grabbed enough liquidity. Pushed down. Pushed down. Tried to come up. Couldn't. Went straight down. Right. So from that M5, it dropped what a good 190 pips. Okay. So let's see if price is gonna. Mm, let's see if price is gonna come up there. One price. I'm not going to place a pending order. I want to see what price does. If price will push up from here, there is another 8, almost 9 minutes for this candle to close. Um, yeah, we've got about 9 minutes, 8.5 minutes for this candle to close. And so today's news. Um, this is what we have. This is what we have. We've got, it's a 5.5 hours, about, yeah, a little over 5.5 hours from now, we have the federal funds rate. And then 6 hours from now, we have the FOMC press conference. Now, those two events, 30 minutes apart, um, will move price, right? First, the interest rate decision will move price. They're expecting to cut rates. They've been talking about this for the last, I think, 6 plus 6 months. They've been talking about this since the beginning of the, I think, since the end of the first quarter. They've been talking about cutting rates closer towards the third quarter. So that's what's happening right now. So, price may have kind of gold current price may have priced this in. We don't know, but there is going to be volatility. There will be some sort of volatility when those numbers come out. And then 30 minutes after that, when the press conference happens, that's when um, Jerome Powell makes a statement on what they plan to do next at the next meeting. So that too will give some sort of direction. If not direction, it will bring volume into gold, right? Or maybe even direction for the next 2 days. So for Thursday, Friday, right? You might have a move that starts around here and then continues on Thursday and Friday, right? So Thursday, we don't have anything much. We just have this, and Friday we've got nothing. It's just there's no news. So yeah, if you do get a trade in here, I'll look to trade it. If you get an opportunity here, if you don't get something here and we get an opportunity here or here, or somewhere here, I'll look to take it depending on how the M15 candles start to close in this area. Um, and other than that, if nothing happens within the next 2 hours, then I'm going to call it a day, and then come back tomorrow and do the same thing. Do the analysis and wait for price to come to my levels and for me to see the setup that I want to see. Uh, that's all I do, right? Um, yeah, so just about 5.5 minutes for this candle to close. Uh, the 4-hour candle closes in about an hour 35. That's fine. There's plenty of time for a trade before that. Um, it's just that this area is ugly, and the reason it's ugly is because these wicks have come into it. If these wicks weren't there, I'd be a lot more confident about this area because you have a drop, a clean, a base, and then a clean drop after that, and then all the way coming down. So if this was one uh, red bearish candle, or if this was two bearish candles here coming down without touching this zone, would have been better for me. But price has tested it twice. We've tested it here, we've tested it here, and we're coming. We've came here for the third time. So I don't know if price needs to come further to grab liquidity. It might not because it's already tapped it twice. So it might just continue down like it's probably doing right now. It just might just continue down. Um, yeah, yeah. Even it didn't even come here. So even if you drive it on this candle, because we had a high break here and a high break here, price, this candle broke this side, this candle broke this side. I need to see at least two M15 highs broken, at least minimum two highs broken. So this candle broke this high. I don't look too further back. It has to be close to the uh, open of my trading hours, which is the New York Open. So if I consider this candle broke this side, this candle broke this side, and then I draw the fib here because this candle has touched a high liquidity zone. Still, price didn't come to my sniper, so which means I wouldn't have had a trade. So yeah, so I wait. And if price decides to continue to drop down, then so be it, let it drop. If it drops, it might just drop. If it's grabbed enough volume, what generally happens is if prices grabbed enough volume here to make a move down of 150, 100 pips, 150 pips in the New York session, what generally happens is price will break through this first demand zone, go right through it, go to the next one. Okay, that's very possible. Then possibly decide what to do there. If price is going to bounce, reverse there, or bounce there, or break further and move down, that decision is only after price gets to that zone. But before it gets to that zone, we've got a zone here that it has to clear. Until it clears that, we don't know what's going to happen next. We are, yeah, about 65 pips away from that. There is this zone as well, but this zone didn't take anything didn't take out anything to the left, right? See, we have a drop. So this is on the H1 time frame. We have a drop, a base, and a rally, but this zone didn't take anything out on the left. It didn't. This was a zone that came down. So if price went up and took this zone out and went up, then that would be a high liquidity zone, and I would have marked it. But I didn't mark it because it isn't a high liquidity zone, and that zone is also part of this H4 demand zone that price tapped into, right? Um, it's right there. So if I were to just show you guys, Right, see, so that zone is very close to this H4 demand zone that price has already tapped into. That's the reason I didn't draw a zone there. And it's also at the end of this demand zone here. So there's no reason, there's no need to draw another small zone in there because we're already in between two zones. It's already there, right? It just covers those two zones, cover this area. I will not be looking to take any sells here. That's the point, right? When price gets anywhere here or here, anywhere close to this area, I'm not looking to sell, so it doesn't matter. I'm looking only for buys in this area. In this entire area, entire block here to here of about 120 pip range, I'm looking only to buy. I'll be looking for my setup and I'll be looking only to buy. I'm not looking for sells at that point. This is where I'm looking for sells, and price has left there without me. That's fine. You know, prices. We can expect price to move very slow today, very slow um, until the interest rates are out. You know, price is going to be moving very slow. That is why I don't usually trade the New York session that leads up to the interest rate decision because price moves very, very slow. And even if you do get into a trade, it could take a very long time for your TPs to get hit. Um, so you might want to consider having very conservative TP levels just so that you don't hold on to a trade because price can begin to range, right? It can begin to range in this block, in this 100 pip block. It can just begin to range. So it's better if you do get in on a trade up here to have very conservative TP levels and not hold them for until price comes here because it might take a very long time for that to happen. We don't know. Yeah, so we have another M15 candle close. So price has started its descent down, right? It started to descend down. It started to descend um, without going up here or high up into this candle, this M15 candle, right? Because that's the area that I want to take a trade from. This M15 candle here, I would be willing to take a trade here as well with a 10 pip stop loss somewhere around 257970, but price didn't get there, and we've left now, and it's very unlikely that price is going to reverse and come back up there. Very, very unlikely. That this happens very often. I don't get bothered by it because I've seen it happen time and time again, and I'm used to missing out on trades like this. If a trade doesn't come to my level, then I don't take it. You know, if it tapped here, if it tapped here and I missed the entry and I took it a little further down, that's fine because I would recalculate my risk and take the trade because it's already tapped this level. I'm aware of that it's tapped, so I'm willing to risk my same risk, recalculate my lot size, and take a trade a little lower. But it hasn't tapped this, so I'm not willing to take a trade unless price comes up here. Now, if you are trading the signals of the indicator, this would be a sell signal. This would be the ideal trade because at the beginning of the session, I said, right? I said we look to take a sell signal from here. So if I go switch this on, you would see if I just go switch on the signals of the indicator. There you go. There, that's a signal. That's a trade to take, right? If you're trading the indicator buy sell signals, that's a trade to take because we tapped into the zone. See the candle, the previous two candles touched the H4 supply. If it hadn't touched it, I would have been a little wary of taking it, but it did touch it, right? We did touch it. We came up, we touched it, and then we get the signal. Great. You can take a signal if it happened up here. If it touched while it touched, like while it was touching, if there was a signal, great, you can take that. Or this one. Soon after it touched, we came down, got a signal. So that's the trade to take. So that's about a 26, 27 pip risk. And then when price comes to 26, 27 pips, that's one RR. That's why you close about 50, 60% of your position or even more, depending on how much you want to keep holding. So that's the trade you would have taken if you're trading the buy or sell signals of the indicator there. I am just trading, waiting for price a little higher, you know, around this area, price to retest this area and then continue. That's because I'm not using these signals for these live sessions. I'm not using these signals for these live sessions. I do use the signals when I'm not trading the live sessions. I do use them, but for the live sessions, I'm not using the signals. As I said, the reason for that is I want to show people that there is a way to trade on a naked chart just with the MetaTrader tools without having to buy or rent or any indicator. You can just trade using these tools. You can just do your analysis and look for a potential trade. Okay, we've got about 10 minutes for the candle to close. I'll be back in a bit. Okay. Um, yeah. So price did move down. So we moved what? Yeah, that's 1 RR. From the sell signals, if you did take that signal, that's 26 pip candle, and it did come down 26 pips. So that's your 1 RR level price. If you took that, if you trade these buy sell signals of the indicator, that's the perfect trade to take. Just as we said in the analysis, um, here, as we said, for sells, wait for a sell signal from supply. Okay, so that was the one from supply. Or was the next possible trade to take, to wait for price to create a new low, pull back and create, but that hasn't happened yet. Price has not created a new low yet, so that hasn't happened yet. So this happened. So this was the trade to take if you're trading the buy or sell signals of the indicator. Okay. Now price is reacting right to that level, 75. Sorry, 74.02, 2574.02, right to the pip. It's reacting there. Um, yeah, but it will break that. We have a we have a candles with no bottom, so price should break it easily on the way down again. But on M5 we do have a rejection there, showing that that is some sort of a area of interest. But obviously that's right in between, supply and demand. I don't trade in between supply demand. I always trade at the extremes. So either at the red or at the green, that's where I take my trades. I don't trade in between them. Um, it keeps me, yeah, I might miss out on trades, but it also keeps me disciplined. By taking trades right at those extremes, keeps it. I get a smaller stop loss, and it keeps me away from uh, bad trades and also some other good trades, which is absolutely fine. Um, so yeah, so price is reacting to that, right? That's what happened yesterday. We created support there. So if you go on the M15, it'll be very visible on the M15. Yeah. So price did create support there, and then it broke. So that's exactly where price is now reacting again at. That is that 7 RR level, right? But to get the 7 RR, price never came up to sniper to get that 7 RR level. Right? That's a trade that I would have wanted to take, that candle there. That candle to me was a very important candle that was created during the New York session that made this 190 pip drop down. Um, yeah, 180 pip drop down from that candle. That candle is important to me. Um, yeah, that's what caused the move down. So price did come into the middle of that candle, but it didn't come uh, to that level. So you can take it from the middle of the candle. Your stop losses would have been about 20 pips, which is fine, but I prefer waiting there. Now, does price always come there? Absolutely not. It, sometimes it just comes to the mid of the fib, which is the 1 hour. It says 1 hour there, but that's basic the middle of the fib. So if you calculate, that's 20 pips, and below is 20 pips, right? So that's exactly the 50% mark of the fib, right? So if you go down, if you open the properties of the fib, you'll see that that 0. 0.5, which is the 1 RR level, is the midway of the fib, and that's where price touched it beautifully to the pip, and with zero drawdown and a zero float entry, and dropped from there 60 plus pips, right? But I always prefer waiting further up that point there. But it doesn't always come there. It doesn't always come there, but that's okay. I prefer waiting for that trade rather than taking a trade here, right? But if you do understand how I trade now, I think this is the sixth 6 live session I'm doing. If you look at the last 5 live sessions, it's the exact same thing. And if you kind of have understood how the analysis is done, it's pretty simple. It's pretty straightforward, non-subjective. It's not subjective, right? Um, if you learn how to draw these zones the way I've done, then and if you decide I'm going to risk a smaller percentage here and get in on the trade so that I don't miss it, and then keep my bigger position up there, that's fine too. I just don't do that. I take my full position up here, right? I take my full entry up here at the sniper level at 2581. That's where I would be willing to wait for a trade. But price didn't come there. It just came here and we dropped straight down about 65 pips down. So yeah, we might just continue now. We might, if a candle closes below this M, now we've created M5 support here. If M5 candles, one or two M5 candles begin to close below this level, then we're going to continue down because we have clean space to the bottom. If you look on the M15, we've got a little bit of a rejection here, possible rejection here, a little bit support aligning here with these M15 levels. Also, if you look on the M30, you'll see this M30 support here and this M30 support there. So right there, there is M15 M15 demand zone. But once M5, M15 candles begin to close below that level, then we're coming straight to this. And then if we have volume, once price gathers momentum and comes here, it's going to break this and come here, right? So then we're going to have a big move. Price would have made a big move of about 170, 180 pips coming from that point, from where we drew the fib, all the way down here, right? Um, so I will wait for maybe another hour and a half, maybe 1.5 hours. Let's see yeah, so we have another hour, 15 minutes, hour, 12 minutes for the hour, 15 minutes for the H4 candle to close. So I might possibly wait for the H4 candle to close and then call it a day. Because I don't think price is going to come back up again now. I doubt it. Price, I don't know. Price comes back up here and then continues down. I don't know. Let's see. It's got about 50 pips to go up. Yeah, we might just get a reaction here and then continue down again around this 3RR area. As I've said several times, there's a reason why the fib is drawn the way it is, and there's a reason for these levels. This is not just a random fib. These are not the default settings of the MetaTrader fib. These levels are custom levels. Uh, Price reacts to them. You can see how price reacted here, you know, reacted here, reacted here, reacted here. Now if you come here again, if you see if price will react to continue down again even further, right? Um, but this fib is, there's a reason for these levels being where they are. Mm. Yeah, so this candle, 5 minutes for this M15 candle to close. It's uh, it's closing within this range, so the next candle is either, if it's going to continue down, it's either going to break the high and then continue down, or if you're going to go up again, then it's very likely break this low and then continue up to grab some liquidity to go up again. But yeah, this was the move, 26 pips, 26 pips. That was the move down. And from that entry, we moved about 66 pips. Yeah, we did move. It's slow. I said this. It's slow. Today is going to be a very, very slow day until the interest rates come out. We're going to just range a lot. And this is just all of that is ranging territory. 100 pip range, right? Prices just could just bounce within that area for the next 4 hours. Just bounce within that area. So you don't want to get caught in that area. You don't want to get caught between those two zones, right? You're going to be either going to have to, if you do get in a trade in between these two areas, you're going to have to quickly try to get out of it if you're in profit, or don't get into a trade at all in this area. This never trade in this void. I call these voids. This just void. These are the extremes, extremes, extremes. Trade at the extremes. Trade at the extremes. Don't trade at in between these. This is okay. This is fine. This was just price had just started the reverse here, so that's okay. Then we get the signal, and then you come down. That's absolutely fine. These trades usually, when you get the signal after the zone, you usually do get at least 1 hour on these trades before price begins to reverse. Usually, right? If you've got the right, if you mark the zones correctly, then and you got the right signal, it's important that you catch the first signal, here, and not to take, if there was another candle here, try to take that signal, because then that would be a little too late, because this candle is the closest to the zone. So that's the one you would have wanted to take and then come down. Now price is pushing up, a couple of minutes for this candle to close. If we do close bullish, the next one could break and we could go a little higher again. As I said, we are ranging. We're just ranging. We break high, go up, then we might begin to come down again, and then again go up. It's a daily. Still not enough structure here. Thursday, Friday are going to have a lot more structure, because today we're going to either have a big bullish candle going up like that, 500 pips, 600 pips, a big bull candle going up there, go touch 2600 and close above it, or they're going to respect this uh, level here, respect the resistance, or respect 2600 and close bearish, and go down another 500 pips. So maybe to this weekly support. That's possible, right? From here straight down here, about 500 pips. That's possible. So if that does happen, then we have structure. We have good structure. We have a daily rejection of there and come back here. And then we have structure here already. So price, once it comes here, we already have structure to the left. So we have something to trade off of. And if price goes back up again, then we would have structure again up here because price would leave a big bearish candle, making this a daily supply zone, right? Rally, base, drop. If we have a bearish daily candle close here, somewhere here, right? In this area here or below here. So then we have demand, daily demand down here. We have daily supply up here. Then we have some sort of structure. Now we don't have any real structure because we have some sort of a weak daily resistance, and we've got nothing here in this area. We are on the daily time frame. We're quite far away from this uh, zone here, right? This range, we're quite far away from it. We're a good 500 pips away from it. And that 500 pips could be covered today with the interest rate decision. Could easily be covered today. Either 500 pips up or 500 pips down. We just have to wait and see tomorrow how the candle closes today, so that we have a trade tomorrow and the after. Okay, so the M15 candle closed. Price is pushing up again. Right from the EMA, touch the EMA. So go to the M1, tap the EMA, and we're pushing up 40 pips. Yeah, let's see where this goes. Let's see where this candle goes. Where price goes from here. Sorry about that. Mm. 26, 66. $77. Yeah. So 70. Okay. I'm willing to take a trade there, and I'm willing to take a trade up here. But I've reduced my lot size significantly. You can see I'm trading 2 micro lots, right? Because for several reasons. Reason number one, price has tested this zone twice previously, yesterday. And this is the third time it tested it. It already made its move down, right? So reason number one, tested twice yesterday and tested once today. Reason number two, price has already made its way down, right? For those two reasons, I'm reducing my risk significantly. So yeah, that's at 23, perfect, 81.23. Okay, so the stop loss on all of these are going to be 82.66. So okay, so if you do come up there, that's 30 pips, and that entry is 14 pips. And if we come up here, I will take another entry, and that'll be my $15 risk on this trade. That'll be my $15 risk on this trade. Right. Yeah. That'll be the $15 that I'm willing to risk on this trade. So I took this candle, I drew the fib on this candle because price touched it and dropped down. And that level is quite close to, just about 15 pips away from the level that I was at, right? So I'm not sure if price will come further up. It could very much come further up here. So let's see, depending on how fast price comes up, I might not take this entry, may or may not, I don't know, I may not. But here I've got an entry here, and if price comes deeper inside this, then I'll take another entry, and that'll be the maximum. So each entry is 2 micro lots. I've got the trade manager set. 25% will close at 20. The other 25% will close at 50 pips. Okay. And now we wait. Stop loss is up here on both entries, up here. About 51 minutes for the 4-hour candle to close, so that's fine. The 1-hour candle has closed a doji. There's nothing. Both these candles are dojis. You got a candle there, sort of a weak bearish candle here. So it's very likely this H1 high is going to break. Price, it's very likely that there's another 50 minutes for this candle, H1 candle, to close. So it's going to break this high, right? Because it's a very weak candle. Going to break this high to grab some liquidity if it is to continue down. Yeah. Yeah, we're about 16 pips away from entry. Let's go to the M5. Let's go to the M1. Hmm. Yeah, I might, depending on how price approaches this area, I might move this entry 257970. I might move it up here. Um, Obviously keeping the same stop loss, move it up here just to get a better entry. Right, 7 pips higher, and a tighter stop loss, and then um, yeah, then maybe if price goes deeper within here, look to take another entry if we could get somewhere here deeper, but that'll be the final stop loss. If I get stopped out, I'm willing to lose a maximum of 15 bucks. That's all I'm willing to lose on this trade, because price has been at this level several times before. But it's still a high liquidity zone. I still consider it a high liquidity zone because it took out a zone on the left. So we'll wait and see what happens if price does get up here. It is rejecting that area. We are rejecting that area, but yeah, we got 2.5 minutes for this candle to close M5. So this candle can always maybe come down and go up and close a bullish candle, M5 bullish candle, because this edge, it's very likely that this high is going to get taken out. This H1 high is going to get taken out before price continues down. Yeah, that H1 high is that M30 high. Yeah, it's very likely that that M30 high gets taken out. These are the only two things that are constant or controllable in trading. We can, before trade is taken, we can control our risk by taking the correct lot size for our account, the right lot size, or reduce risk, or do whatever that is before we get into a trade, right? That's all. That decision is before trade is open. So instead of just randomly opening any lot size or any trade, you calculate. I show you the tool that you can use, a free tool. If you don't have a trade manager, if you don't want to purchase a trade manager, you can use this free tool on my FX book. The forex calculator. You can use a free tool to calculate the lot size for the pair that you're trading. I use Euro USD here because it's similar to gold in terms of the movement. Um, it's similar to gold, so I use Euro USD here, and I put in my account size, and then the dollar, the money that I'm willing to lose. You can change this to stop with a risk percentage, or I like to use uh, a fixed dollar value. So on a trade, on a certain trade, like for example, if this had met all my criteria and it was coming to the zone for the first time, then I would risk maybe 1%. So I would risk about $20 on that trade, right? About 20, even $25 on the trade. But because of the reasons that I mentioned before, because price had visited this zone several times, it's already come, it's already made a move in New York session. Because of all of that, I'm willing to risk less. I want to risk less. So I can, so this is a decision that I'm making before a trade is open. Before I'm, I'm deciding to use only $15 with a 30 pip stop loss. That's the maximum stop loss, right? If that gets hit, then the maximum I'll lose on this is $15 on this trade, right? Roughly $15. Okay. Now, what you do off the now the second way, uh, the second method, and you got to do both, is to manage risk after a trade is open. So if I do get entry here and price continues to shoot up, then instead of letting the full TP hit, maybe close 50% of my position when price gets right up here. That's the second method, but that price has to get, you have to be in a trade for that. So once you're in a trade, that's how you can manage risk. Those are the only two things that you can do to manage risk in trading. And you got to manage risk in trade. You have to have uh, both these methods, either one of them or ideally both of them, to be consistently profitable in trading. You have to. You have to. There's no way around it. You cannot ignore these two and still try to be profitable. In the long run, you are going to blow your account if you don't have these two methods. If you are over trading, over risking, if you're not managing a trade when it goes in drawdown and you're letting your stop loss after stop loss get hit, it might take time, it might take 6 months, it might take a year, but you are going to blow your account at some point of time. So this is the only way to stay afloat, to just take take the right, you don't know if a trade is going to be the right or wrong trade. We don't have that information, you know. But the information what we do have are the two things that we can do is to trade the correct lot size, and then once we are in a trade, uh, to manage risk when price goes against us, when we get into drawdown. Okay, so we're ranging. We've got as expected, we're just ranging in this black area, in this area which is 100 pip range. We're just ranging. Okay, we're just moving up and down with absolutely no direction, and that's expected, because this is not any other day. This day we're having interest rate decisions later today, about 5 hours from now. So we are we are going to range quite a bit. Um, but I'm willing to take a trade up here. I'm willing to take a trade up here. I'm willing to roll the dice up here. If price comes here, I'll take a trade. If it doesn't, continues down, or if the next 1.5 hours, if price doesn't come up there, then I'm done. Then I'm not going to be holding this trade. I'm not going to be holding pending positions after an hour and a half from now, because that should be enough time for price to come up and get me in a trade in the next 1.5 hours, because that'll be the 4 hour. It'll be just after the 4 hour candle, the new 4 hour candle open, and that should be sufficient time to get in, and at least to get in a trade. If not out of a trade, at least to get in a trade, into a trade, that should be sufficient time. Yeah, we've been here for now and almost a hour and 40 minutes, almost an hour and 40 minutes with nothing. Nothing. Okay, I'll be back in a few minutes. Nothing really significant is happening. Okay, just about 3.5 minutes for this 30-minute candle to close. Um, this high is still, this is the 1 hour high, and that high is still kind of pending. And so the open was at 15. If you go down to the 1 minute, um, yeah, that's that high. That high is very likely going to get taken out. Um, yeah, that high is very likely going to get taken out. And once that high gets taken out, then we're just like 7, 8 pips away from high entry. It's very, very likely that that high gets taken out. Um, yeah, it's it's very likely that this high gets taken out right here as well, and that is why I'm not fully convinced about this entry here. I might just push this entry up here when price takes out this high. I might just push this entry up there, and then wait for price to get me in, and then maybe if you go a little bit higher, take another entry deeper within, deeper inside this sniper area, deeper inside this 11, 10, 11, 12 pip area, and then hopefully wait for it to reverse and come down. Um, yeah, so we are very likely going to close 2 minutes more for the candle to close. We are very likely going to close um, an M30 bull candle here. And then once the M30 bull candle here can close, the next candle is going to break this high, probably create a low wick, break the high, this candle high, then break the H1 high, and then continue higher. And when it does, I think it's gonna, so I'm gonna move my entry higher, 80.34, 45, 80.34. Yeah, that's, this open is 80.35 and 80.30, 80.34. Yeah, yeah, yeah. Once this high gets taken out, 8 pips, 14 pips. So 14, 22 pips, and then we got another entry up there. Got another entry up there, which is about 8, 9 pips, so 8 pips or 9 pips away from the first entry. All right, good. That I'm okay with. That risk I'm okay with. Let's see how we. If we do take a loss on this, let's see how we're able to reduce that loss as much as we can. Okay, now we should break the high here, may create a low wick and then break the high, or we might just continue to break the high here, break the H1 high here, and then continue higher. Yeah, we are going to create a low wick. We have no bottom wick, so this candle has to create a low wick at some point before this candle has to create a low wick. Okay, we've broken the M30 high here. Now the H1 high is right there. Broken this M30 high. H1 high is here. Then as soon as we break that, then we're back in this red area. And that's my candle. That's the candle that I've got my eye on. That candle there from yesterday's M15 candle. Then we have this M15 candle and a move down, but price yeah did not come Did not come to our sniper level. Fell short of 4-5 pips from our entry. Yeah, 4 pips away from our entry. It fell short of 4 pips. Now we're pushing down again. So we broke the M30 high and now we're pushing down. Yeah, we're just falling again. But this, I'm waiting for this high to get taken out. This H1 high. 31 pip drop. Uh, grab liquidity from here. Then should push up. This is possibly the low wick. Possible M30 low wick. This is possibly the M30 low wick that we're creating here. So the candle created, broke the high first, came down, probably creating a low wick now to go further up. But we got a good 26 minutes for the candle to close, and the close of that 26 and the close of that M30 candle will also be the close of the H4 candle. So if price moves up, then the H4 candle is going to close a bull candle with a top wick to be filled, right? So then price can create a bottom wick and go up towards our entry. Now, when that happens, it's a little uncomfortable for me, or a little dicey, because if you do close, if the H4 candle closes like this, a bull candle with a big top wick, the next candle can create a bottom wick and go up to fill this wick, and then go to our entries and then continue higher. And in which case we're going to get stopped out on these trades, and it's pointless taking these trades, right? So we're going to keep an eye on how this H4 candle is going to close, right? We want to see how this H4 candle is going to close. If it's going to close with a big top wick to be filled, that's very important. This is where reading candles is important. This is where reading candles is important. You got to be able to read candles, and you got to make use of that knowledge um, at areas of interest or where you want to take trades, not just read every candle that prints everywhere. It's pointless trying to read, like, if I'm trying to read an M5 candle here and try to take a trade off there, well, if that is your trade plan, then good for you. But I I don't recommend that, right? Having an understanding of how to read candles is very important, but where to use that knowledge is even more important. Where do you use that knowledge? Where? Which areas of the chart do you use that knowledge? Just read them anywhere and try to take trades anywhere? No. You learn to read candles and then decide on what's the best place to use that knowledge. Where can you get a low risk, high probability, high RR trade? That should always be the end goal. So we had a big rejection here. Price just pushed away from this, from the beginning of the fib, that we have drawn. Pushed straight down from there, 2578. A big M5 candle close here. I don't know if price is, let's see, over 23 minutes for this M30 candle to close. So anything can happen. This M30 candle can drop straight down here, right? And it looks like it's doing that. Drop straight down here, or create a bottom wick now and then continue up from around here. Continue up again. It's ranging. We're expecting price to range today until interest rates. Yeah, so now if this M5 candle closes below this range here, below these wicks, I mean below these bodies here, sorry, not wicks, below this support or below the bodies, right? That's how you draw support. You draw them at the base of the bodies. So below this support, below this support, below this support, below this support. We've got three supports very close to each other. If an M5 candle closes below this, then it's very likely that the next M5 candle creates a top wick and continues down, right? Continues down, and then we're not coming up again. We're going to just go down, because then this candle was the liquidity grab. This M5 candle was the candle that grabbed liquidity, right? So if you go on to the M1, very clear that candle. So if you look at the previous candles, all the previous candles, this candle stands out. It stands out because it grabbed liquidity. You'll be well, once you start reading candles, you'll start noticing these candles. You'll see a candle that stands out at a key level, right? So that's a very, very important area. Start of our fib, 2578, okay? 257814 to be precise. And there's a liquidity grab right there. So if we do M5 candle continues closes below the support that I showed earlier, then that is the liquidity grab, and then we continue down. That's how you read candles. 5 minutes, yeah, just under 6 minutes for the M15 candle to close, and seems like we are going to close below this support. And if we do close this support, the next candle creates a top wick, continues down all the way down here. Yeah, that's a good 56 pips drop, another 56 pip drop. Yeah, price never came close to our entry, not even close. I mean, the first one was about four and a half pips away, and then the next one uh, was a good 10, 11 pips away. So it didn't come up there, neither did it come up. It didn't come up to that sniper, neither did it come up to this sniper. We just continue down. Just grab liquidity. We're pushing down now. Now we're pushing down. We're coming down here. Yeah, we've broken the low. 4 minutes. Let's see where this candle. Yeah, this candle closed below this. Exactly as we said, the candle closed exactly as I said. The M5 candle closed below this support, below that support, below that support. We might pull back to create a top wick, and now continue straight down. Yeah, that's a good 50 pip drop coming up. 50 pip drop coming up. Yeah, coming down now. Now this is just volume coming in. This is the NYSE Open. So this move is a part of the New York Stock Exchange Open, right? We've dropped 59. We're going to continue down another 40 pips, 40, 45 pips, 50 pips more, probably even more than that. This is the New York Stock Exchange move. This was the New York Open. We came down. This was the New York move, 70 pip move. Then we pulled back up, grab liquidity 50 pips up, and now we're moving right down here. In NYSE, that's a 100 pip move down. Yeah, coming down. That's it. We're not coming back up. We're coming down now. We're done. It grabbed enough liquidity just before NYSE. It grabbed enough liquidity during the NY session, the NY after the NY Open. The hour and a half after the NY Open, it grabbed enough liquidity. It started coming down at NY Open. Then it moved up and grabbed liquidity just before NYSE, and now it's moving down. We've come right here. We've come to this M15 demand zone that also aligns, as we said, exactly with this M30 support, right? There's support right there. So if I were to draw a box there, that's your support. Okay, that's your support level. Just change the color there. Okay, that's support. That's M30 support. Closed above, rejected, closed above. Then we started closing below. We rejected, closed below. Then again we closed above, closed. Then we rejected, closed above, closed above. Then we again closed below. Then we rejected, closed below, and now again we moved up, and we're coming to reject that area. So it's come right to that area. So if these M15 sells, this would be the area to get out. This would be the area because now we've come to M30 support. Majority of the position should get out here. Majority of it. This also aligns exactly with the 7RR level of this fib here. See how price bounces or reverses to the pip at these levels. We drew the fib here, we touched it, 7RR, we're bouncing. And this 7RR aligns exactly with this M30 support. If you go down to the M1, look at that bounce. Right to the pip, touched it, bounce, and we're trying to push up now, right? So that's the area that you want to take majority of your position out if you took the M15 sell signal. Majority of your position. So if you were there, if you took it there, then you come here, that is 26, around 40 pips, you take about 80, 85, 90% of your position off, and you keep another 10% running to the H4 demand zone, 10, 15% position running to the H4 demand zone. That's it. Simple. We got a strong M15 candle close, just like we said. It's just like I said, below this support. So now top wick and push down. Yeah. Now this H4 candle is rejecting rather than showing that it's going to close above these levels, right? Close bullish above these levels. Now it's rejecting this area. It's rejecting, right? Now it's rejecting. Now there's a difference. First we had the body here. It was showing that it was going to close above. Then maybe we continue higher. But now it's rejecting the area, right? Still we got another 13, 14 minutes for the H4 candle to close. So you can see the difference now. In the last 5-10 minutes, we've dropped significantly. We've dropped 30, 40 pips. We've dropped, right? But we got to see how this four candle is going to close, how the M30 candle is going to close. All very important. All a part of reading candles. All very important, necessary for understanding, you know, how price reacts to key areas. I'm going to be here for another maybe 30 minutes. 30 minutes, maybe 40 minutes. Then I'm going to call it a day. Yeah, we're coming down now. The 1 hour candle is going to close in 11 minutes. It'll probably close bearish like this, so we probably create top wick and continue further down. Yeah, that's a top wick on the M15. Got the top wick. Yep. Now we should just continue down. M15 candle close, pushed up, create top wick, and continue to push down. Yeah, here we go. Create the top wick, coming down, straight, yeah. Nothing stopping it, come straight to demand. Here we go, come, tap it. Okay, so just wait 10 minutes for this candle to close, and then just want to wait for 10 minutes for the candle to close. Yeah, we are rejecting that zone. That's a high liquidity zone. We had marked it right at the beginning of the session. We had marked it a high liquidity zone, and price reacted to it beautifully. Beautifully reacted. We had marked it as a high liquidity zone. So you want to know what a high liquidity zone is. Go back to the beginning of the session and relook at why we marked it, how we drove it. All of that's clearly explained. and price touched it and dropped down, right? So we touched it, we've dropped down 111 pips, 110 pips, and we should continue down now. This is the NYSE volume, so we should just continue down. For the next 5-10 minutes, we should continue down. Yep, keep going. It should go 5-10 minutes, and then the next candle after the H4 close, we could pull up, and then we could even break this zone and continue down to this one. Very likely. That. Yeah, that now price is not going to be coming up there again. At least not in the next until I'm here for the next 30 minutes. Price is not going to be coming up here to get me an entry. It's not going to pull back 100 pips all the way back here to get me entry. So that's I'm going to close these trades now in the next 6-7 minutes. I'm going to close these trades. I just want the 4-hour candle to close, and once the 4-hour candle closes, I'm going to close these trades. But that, yeah, so that was the trade. We drew. If you go to the M15, just to recap, right at the beginning of the session, when before any of this happened, we drew this M15 candle, right? We drew the fib of that, and we were willing to take a trade up here at the sniper. Price did not come up there. It came to the mid of the fib, and it had enough volume at the mid of the fib to reverse and drop down 110 pips, and maybe even continue further down here, another 60 pips down, further down here. So that'll be the move for the New York session. That's the correct move of the for the New York session. At least when I say New York session, it's the first 2.5 hours of the after the New York Open. Those are my trading hours. So that's what I mean by the New York session, right? I always try. I don't get it right all the time, but I always try to look for the correct move, the correct setup that made the setup that made the correct move of the day. And this was the setup here that made the correct move of the day. From the mid of the fib, from the mid of the fib of this candle, price got entry, came down 110 pips, and maybe even continued down. So, as I said, the setup that makes the correct move for the New York session. Right? That's what I try for. That's what I aim for every day. That's what I aim for every day, to find the setup that will possibly start the correct move for the first 2 to 3 hours of the New York session. That's what I try to look for every day. I don't get it right every time. No way do I get it right every time. But I try to find it, even if I can't trade it, if I don't get entry like today. I didn't get entry on it, but I try to find it, and that's the move. First 2 hours, that's what happened. We got in there, price got in there, and price came down to demand. Now, when it comes here, we're going to have obviously some sort of reaction. The H4 candle is going to close in 5 minutes, so we're going to close a bearish candle, a strong bearish candle. The next one will very likely pull up a little bit and then break these lows. And then once it breaks the lows, once you have M15 candles closing below these lows here, we're coming straight down to the next zone. And since that zone has already been tapped, we could even come deeper down into that zone somewhere here. Okay, so that's a good another 100 pips away from where price is now. Very possible. Very, very possible. Come down another 100 pips. That's the NY open. I mean, the correct move for the NY session, the first 2 to 3 hours of the NY session. Okay, so 5 minutes from now, I'm gonna end the stream, and that'll be 2 hours of the New York session, plus obviously the 15-20 minutes that I do the analysis prior to New York Open, and so that'll be 2 hours of trading. So if I generally don't get a setup within the first 2.5 hours, then that's it. I'm done. I come back the next day. And today I was kind of anticipating this. I was not expecting to get in on a trade because volume is yet to come. This is not the volume for the New York session. The volume is going to come in about 5 hours from now. That's when we're going to get volume. Yeah, during the interest rate decision. Okay. So when the 4-hour candle close, with that I will end the session. Just want 3 minutes more. I want to see how this candle closes. Candle closes probably going to close somewhere there or even lower here, and then just continue down. The next candle create a little bit of a top wick and just go right through this green zone. Go right through it because there's a lot of volume now. So as I said, go back and listen. This was the liquidity grab. This 1 minute candle, right? You can see that this candle stands out from all these candles, and it's as a key level. It is at a key level. Unfortunately, I was waiting up here. I didn't want to get in on this mid level. I don't like taking trades at the mid level of the fib. You can take it, not a problem. You can reduce your lot size and take a trade. I don't. I like to stay. I like to wait up here. I always have. So I like to wait up for that really tight entry, tight stop loss, tight entry. That's what I like to wait for. Because the reason for that, I mean, there are several reasons for that. It's not that these trades are bad. It's just that these trades are better, right? So if I do have a loss, it's just a 10 pip loss, right? 10, 12, 15 pip loss. Easier to recover a 15 pip loss than it is to recover a 30 pip loss, right? That's the logic behind it. It's easier to recover 15 pip loss than to recover 30 pip loss. That's the logic. That is why I always try to take entries with tight stop loss on gold, because the losses are inevitable. You are going to have losses. You will. You must. It's a part of your trade plan is to have losses. That's has to be losses have to be incorporated into your trade plan. So if it is incorporated into trade plan, then what do you do about them? How do you make them profitable? How do you make that loss profitable to you? So for the way I do it is, I've shared several reasons. I calculate the right lot size before I open a trade. I manage risk after I'm in a trade if price goes in drawdown. And then the other way to do it is to take trades with very tight stop losses, because then um, I mean, not just to take random trades with a tight stop loss, but at the key level, according to your trade plan, if you take it at the tightest possible place, then when you do have a loss, it's easier it's easier for your trade, the next trade, to recover the previous trade's loss, because it's just 15, 20 pips. And my trade manager is set to close partial positions at 20. So when that 20 hits, uh, more often than not, 50, 60, 75% of a previous loss is already covered, is already recovered. That's what I mean. It's already recovered. Okay, so a few seconds for the candle to close, and this is how we're closing. We are closing a doji. Oh, we are closing a doji. Interesting. So, I mean, interesting as in this is what we expected. Price to range between this red box and this green box. And that's exactly what it's done. The 4 hours, it's ranged between 100, within 100 pips. We've just ranged in that. Now, I wanted to take a trade right at the top of it. I didn't. And now price has come to the bottom of it and rejected. So we are in that range. And yeah, and I'm done. So I'm going to delete my pending orders. That's it for today's session. I hope this was educational. I hope I was able to share some value. Please go over my streams. Um, I trade the exact same way every day. The analysis is exactly this, done the exact same way. I follow the same steps every day. I look to take same trade setup every day. Sometimes I do get an entry, sometimes I don't, and sometimes I do have a loss. And when I do have a loss, I manage risk. You can see all of that in my streams, right? And today was one of those days where I didn't get an entry. Um, all right. So I'll be back here tomorrow, same time, for with analysis and with possible trade for the New York session. See ya.